Hey there, everybody. Thomas with Basecamp Trading. It is Monday, April 20th, and it's going to be a day that will go down in history as the day that first time crude oil ever traded negative. So with that being said, we're going to take a look at crude oil. We're going to talk a little bit about what contango or forwardation is, what it means, how it works, and we're going to talk a little bit about the crude spread that we talked about a few weeks ago and all about what's happening with crude oil here. So with that being said, don't forget to like and subscribe if you haven't already done so. So right here, you can see the crude oil chart on a daily basis. And obviously it's been just trending straight down. We broke out of this compression the other day and just took a nosedive today. The biggest move I've ever seen in crude oil. We went from $20 a barrel to negative 40, which is a $60,000 per contract move, by the way. And that's in the May contract of crude oil. Now, what you're wondering is, or what many people are wondering is, how come, for example, crude oil fell through the floor today, but we haven't seen USO quite drop to follow? Because a lot of people are buying USO in order to take advantage of the crude oil prices, trying to get in at the bottom. Well, one thing you got to understand is with ETFs like that, the way that they put together their portfolio is they're using futures contracts for a lot of it, and they're not just in the one contract month. And you got to keep in mind that each contract month trades differently. And normally you trade in contango, meaning the further out that you get from current month, the higher the price is due to things like cost of carry. Now, in the case of right now, the reason we're seeing such a huge sell-off in the May contract, but not in the June, July, and August contracts, are not nearly as big of a sell-off in June, July, August, etc., is because there's another thing at play here that we've been talking about, if you remember, at Basecamp, and that is the demand for oil is just through the floor. And as they start to slowly reopen the economies and reopen the country, we're going to see demand slowly increase. Now, we've already had OPEC and others start to address the oversupply issue because they're starting to cut back. Instead of continuing to just flood the market with oil, they're cutting back on oil prices or oil production. But at the same time, demand hasn't picked up yet. So we're not going to see a huge reversal in oil until we start seeing demand come back in as well. Now, this is a snapshot I took earlier of all the different crude oil contract months starting in May, which is one you can see here, negative 24.40 when I took that screenshot. And here's what all of them look like on a graph. So this is what's called contango or forwardation. The further out you get, the higher the price should be, because there's things like cost of carry that go into the price of oil. Now, with that being said, the other thing to keep in mind is the further out we get, the higher probability of the market opening back up, the oil market opening back up. That's why we're seeing such huge spreads between each of these rollover dates. Okay, that's why we're seeing, for example, $20 per barrel in June, but December we're at $32 or almost $33 a barrel. Okay, so there's a huge difference there. So keep an eye on this, because as this starts to kind of level itself out, that means we're starting to see demand come back in, and it means we should start seeing the trend shift back to the upside. Now, with that being said, we had a really unique opportunity a couple of weeks ago. If you are, again, a member of Basecamp, we talked about this. Also, if you follow me on Twitter or StockTwits or anywhere else, I posted this spread setup several times where gasoline was actually cheaper than oil, which is not, it can't stay that way for long. It happens every once in a while, but it rarely stays there for long. And that spread has now moved about $50,000 as of right now. It's $50,000 in your favor per spread that you traded. And the way that you would have traded that spread is you would have sold crude oil and purchased RBOB, which is near carbon blend stock, basically unleaded gasoline. So you're in a spread trade which is hedged, where you're long and short, very correlated markets. And then how demand just died for oil, it really sent that spread rocketing in your favor here today, to the point, at one point, you were up about $70,000 per spread. So the next question I want to answer here, so that played out really well. Great job. I had a bunch of people asking, hey, can I jump in now? And I was saying I wouldn't necessarily jump into the spread now. But then we had another question that came up, that what happens with negative oil? What does that mean, negative oil prices? So there's actually no storage left, or basically there's no storage left for oil. So the oil companies are paying you to take their oil so that they can free up storage to keep producing more, basically. So what's happening is technically you could get paid $17 or $18 per barrel to take oil in order, if you had, for example, a huge storage shipping container or not shipping container, but a tanker to hold the oil in, and you could get paid to take that oil. So that's what that means. And this is very important because it shows the significance of what's happened in the energy markets here. Because by shutting down the global economy, basically, we've killed demand, and the supply is still coming in. And this might kind of put the pressure on governments to start opening back up and show just how big of a problem this is, because this negative oil is unsustainable. Obviously, I mean, we're already positive in the next contract month, but if we did see really low oil prices like this again, or negative oil prices for an extended period of time, this is going to just absolutely crush many companies and even small or even countries that are out there that rely on oil production for their GDP. So pay attention to that, because this is a very serious thing that's occurring with the oil markets, and it's going to put downward pressure on the stock market, and it's also going to put more pressure on governments to start getting things opened back up, in my opinion. But that's all I have for you for today. Crazy day in oil. Again, first time in history I believe we've ever had negative oil. Biggest move in history. Like I said, $50 per barrel move, or $60 per barrel move, just about. So absolutely insane. But that is it for today, everyone. Don't forget to like and subscribe. If you're not a member at Basecamp already, you can check it out in the link in the description below. But until next time, happy trading, everybody.